If you look at the data from 2010 until now, identity theft is up 267%. So whatever we're doing, it is not working. I mean, it's an unbelievable explosion in fraud.
No matter what a fraudster does, they will never change their intrinsic behavior. If they have a bunch of stolen credit cards, they're going to context switch and copy paste them, right? So that's how we catch them.
If you unpack those cyber attacks these days, the vast majority of cyber attacks are really social engineering or credential loss of some kind, right? Somebody stole a password somewhere or got something, somebody reused a password or was irresponsible with their credentials. Some bad actor got their hands on it and they were able to slip into the system and then from there do a bunch of damage.
Hello everyone and welcome to Fintech Leaders, coming to you from New York City. I'm your host, Miguel Armaza, and I'm a co-founder of Gilgamesh Ventures, a venture capital fund that backs early stage fintech entrepreneurs in the US and Latin America. If you enjoyed this conversation, I invite you to leave a review on Apple Podcasts or Spotify so more people can learn about fintech leaders. Today, I bring you a short deep dive into one of the most pressing issues facing the financial industry: consumer fraud prevention and identity verification. Longtime listeners have surely noticed that over the last couple of years, I've interviewed some of the top leaders in identity management and fraud fighting. And over the next 20 minutes, you'll hear a summary of the most interesting takeaways from 5 extraordinary industry leaders. In this episode, you will learn about the current state of financial and identity fraud and the creative tactics used by fraudsters, advancements in anti-fraud measures and identity verification, the delicate balance between security and user experience, innovative products from each of these companies to prevent fraud, and a lot more. First up, let's dive into the current state of fraud. You'll hear from Blake Hall, CEO of ID.me, Nick Peddy, CTO of Clear, Soups Ranjan, CEO of Sardine, Trisha Kothari, CEO of Unit 21, and Tommy Nicholas, CEO of Alloy.
We won $5 million in grant funding from the Department of Commerce in 2013, and they thought identity theft was a problem then. If you look at the data from 2010 until now, identity theft is up 267%. So whatever we're doing, it is not working. I mean, it's an unbelievable explosion in fraud. And I was listening to Phil Venables at Google Cloud talk about these fraud rings. He's the CISO of Google Cloud. And he said that some of their research shows that these fraud rings will reinvest up to 30% of their take into R&D. And so if you think about like better than like top quartile Silicon Valley, which like 23, 24%. So they're not content to just stop like for what they took during the pandemic. They're constantly innovating. What we're seeing with generative AI is this huge surge in fraud attacks that are really in 2 different flavors. You've got the West African groups that are doing these scam attacks, primarily out of Lagos, Nigeria, and Accra, and Ghana. And they've trained these large language models that are the evil cousins to ChatGPT for evil. You can buy subscriptions to these LLMs in the dark web. Fraud GPT, very simply named Worm GPT are 2 examples of it. And this takes the Nigerian Prince email to a completely new level where, the grammar and the syntax is not obviously wrong and the whole premise is laughable. These are really deeply sophisticated real estate scams, cryptocurrency scams, job scams. In fact, young people are being victimized by social engineering at higher rates than older people. That's what the FTC data shows. That's what our data shows.
If you unpack those cyber attacks these days, the vast majority of cyber attacks are really social engineering or credential loss of some kind, right? Somebody stole a password somewhere or got something, somebody reused a password or was irresponsible with their credentials. Some bad actor got their hands on it and they were able to slip into the system and then from there do a bunch of damage. There's a massive ongoing cyber attack happening in the healthcare space right now that I think is right that a lot of people are seeing in real time. They have not yet announced what the root cause of that is. They're still fighting fires, I imagine. Miguel, I'm going to mark my words here on this podcast. I guarantee you when they finally get around to talking about what had happened and how they got through it, I guarantee you it's going to start with somebody got social engineered or somebody had their password stolen or somebody forgot to reset their password or something like that happened that ultimately was the root cause of everything. Again, it comes back to identity.
Some of the the most creative attacks that we are seeing are phishing done via social engineering. We are also seeing a lot of, phone thefts, physical phone thefts, which lead to someone draining your bank account, right? And then, of course, you have the classic stolen identity / synthetic identity fraud. So I can go into each of those, right? The first one, social engineering scams, right? It takes multiple forms, right? So it doesn't matter if it's crypto or bank. It's still social engineering as the vector where someone reaches out to you and either convinces you to buy crypto by claiming to be a crypto investment advisor, or they can pretend to be a representative of your bank saying that, hey, Miguel, I'm calling from your bank. We owe you a refund, but before we give you that $100 of refund, you got to send the bank like, $75, right? To prove that you are who you say you are. And in all those cases, what they do is they then get you off the phone onto your computer, ask you to install software like TeamViewer, AnyDesk, or Citrix. These are remote access tools, which are typically used by customer support agents to walk you through your problem that you're having on your computer. However, in this case, of course, it's a scammer walking you through it. They get you to log in into your bank, and then at a moment where you're not paying attention, they blank out the screen, so you don't really know what they're doing, and then they withdraw money from your bank account to a destination they control.
So fraudsters are incredibly creative, as we talked about, and they're also really well coordinated. We see a lot of fraud rings where people are working together. I'll give an example of this fraud, which, it sounds crazy that this is even existent today, but there's a lot of check fraud that we're seeing right now. And you might think that checks, isn't that a thing of the past? But 40% of B2B payments are made via checks, which is absolutely insane, but it's still a thing. And what fraudsters are doing now is that there are these fraud rings where fraudsters are intercepting the checks over mail, and they're stealing the mailboxes, getting the checks. And then what they're doing is they're removing the name of the individual and the amount, and then they're selling these checks on WhatsApp groups or Telegram groups. And a lot of the check washing and this type of method has existed in the past, but to the secondary marketplace is something that's very new, and the lack of security and the mailbox theft is on a rise. And so that kind of ingenuity of, okay, I'm going to create a business and on fraud and then sell it to other people on WhatsApp is something that we did not see before.
What's changed is that fraud has gotten bolder and fraud has gotten weirder over the intervening 4 years. Like, it has gotten way bolder and way weirder. I would say the weirdest, I think the best example of weird that I'll give you is social media plays a huge role in scams and various other kinds of fraud now, where we'll find our clients, they'll either tell us or we will find that there's little pockets of like WhatsApp or Weibo or Twitter or Facebook where people are saying, hey, Neobank X is doing a giveaway of money. Here's how you get it. And they just outline committing fraud, but like it's packaged as, a giveaway. And then there's sort of plausible I think the people who follow that, they know, but there's plausible deniability. And, there's various ways it benefits the people who are writing these playbooks. That's weird. And you'll see these bursts of fraud that you're like, where did this come from? And you're like, oh, it's this social media thing. That's crazy. So there's a million versions of this. I can go do. That's one way it's gotten weirder. It's gotten bolder, and this is a scarier thing, but it's gotten bolder in the sense that there are things that we used to, as I've been speaking to fraud leaders over the last year about this, like there are things that we used to think wouldn't happen. So for example, if somebody's committing fraud in a digital channel, you assume that they're not going to then go exit the fraud in a physical channel, meaning like walking into an Apple store with the stolen card they got and buying stuff and walking it, because now they're on camera. Right. Now they're in person. Now the whole thing's revealed itself. And for some reason, I can speculate, but for various reasons, some of which I know, some of which I don't, I guess would be a better way to say it, is there's way more like walking into Apple stores and walking out with computers some of that goes back to actually what I just talked about with the social media, which is some of the people who are involved are being manipulated. And so they can be manipulated into doing anything.
Yeah.
Hey, go sign up for this neobank and now go walk into this Apple store and tell them you're buying computers for this company called Alloy because they couldn't get computers shipped for their new employees in time. And these people think that this is actually all a real legitimate thing that's happening. And then they ship them off and they're shipping them off to the fraudster who supplied them with stolen funds. And now they're the ones holding the bag. That's part of it, people being manipulated. But I believe another part of it is simply some fraudsters are just being bolder.
Yeah.
And it's become a more professionalized. The dollars are bigger. The pressure on them is higher. Their organizations are bigger. And so it's got weirder and it's gotten bolder.
And now let's learn what each of these companies are doing to help prevent fraud and safeguard consumers' digital identities.
Fraud prevention is something which cannot be done by machines alone, right? So you have to have humans in the loop, which are prior fraud fighters, etc. So what we offer is when you hire Sardine as an API for fraud prevention, we also give you a team of professional fraud fighters, right? Who then are constantly looking at your traffic, looking at your payments, looking at your KYC data, and they are staying on top of it and then creating new rules for you or passing the feedback back to our machine learning team to update our machine learning models, right? So there's constant feedback loop via that process. Secondly, everyone who integrates Sardine, we ask them to pass us feedback data, which in this case really just means chargebacks or ACH return data, so that we can consistently keep learning. And thirdly, the most important thing in fraud prevention is to have all the data in place in case you get hit by fraud. Then you can go and look at what happened and see if you could have caught that fraud attack using the data. What we offer to our customers is a behavior biometrics / device intelligence SDK, both in web as well as mobile, where it looks at how you type, swipe, scroll, how you move the mouse, how you hold the phone in. It also fingerprints the browser, fingerprints the device, and all of the data is gathered transparently in the background in a privacy-preserving way, so that whenever there's a fraud attack, you can go back and look at it, right? And these are all intrinsic behavior features. These are features that the fraudster will not even be aware that we are actually collecting about them. And the key word here is intrinsic, because no matter what a fraudster does, they will never change their intrinsic behavior. If they have a bunch of stolen credit cards, they're going to context switch and copy paste them, right? So that's how we catch them. The need for real-time transaction monitoring is pretty important now, especially with new faster payment methods about to be launched, or as faster payment methods take prevalence. For example, Miguel, in Brazil, like Pix has taken off by storm, right? And we are hoping that RTP and FedNow similarly take off very quickly in the US. However, banks today, they still work on core processing engines, which are which were written actually 3 or 4 decades ago. In fact, some of them were written in COBOL, right? So they're still like maintaining that stack. So you are actually adding like a Ferrari engine on maybe name a very old car, like a really, really old car's body, right? Chassis. So it's actually very important that in order to fight faster payment fraud, you have real-time engines which look at the data and they can stop a transaction from happening in real time, because with faster payments comes faster fraud. Fraud and growth are really two sides of the same coin, right? In fact, what we have seen is that if you do fraud prevention better, you can actually increase conversion rates. So I'll give you one example. So we also run a second line of business, which is our crypto on-ramp business, right? Because we got really good at fraud prevention, we said, okay, when you are allowing folks to purchase crypto, the hardest thing to do is fraud prevention. So we might as well move the money. And today our crypto on-ramp is being used at wallets like MetaMask, Brave, Ledger, Exodus, etc. And what we realize is that typically in the industry, other card to crypto on-ramps, they achieve like 50 to tops like 70-ish% conversion rates, right? When we launched, we are hitting like 85% conversion rates. And the reason for that is we actually stop a lot of bad traffic upfront. The 15% of traffic that we stop upfront is never sent to the issuing banks. So the issuing banks, they're being, we are consciously training them into believing that Sardine is a trusted counterparty to them, right? So that so their fraud algorithms don't start blocking anything that Sardine is sending, right? So that's how you can achieve a good balance between fraud and growth.
We're Visa 2.0. So to borrow a line from Visa, we want to be everywhere that you want to be so that you can bring your identity and your credentials with you. Once you have social login and identity tied together, you can do social login and identity plus payments, plus your business credentials, plus like your Netflix and your HBO and your Showtime subscriptions or your fishing license. And so what we get to do as a company is we get to give people time back. We do all the check-in for MGM and Wynn hotels. There used to be like lines that were hours long, at happy hour. Now you can skip the line by verifying your identity. Your phone turns into a room key. We give people 15 minutes of their life back. And so as we do some of these additional things of like adding more credentials and programs, things that might frustrate you as a consumer, like you're setting up an Apple TV or a Roku box and you have to go HBO app by app, enter your password or whatever to have a social login that is universally adopted, where we already know that you're you. You could just pick your different subscriptions and we could send an API call to the provider and have it come back, and you just saved an hour of your life. The content providers have lower churn because it's easier for paying subscribers to get access to what they want. We actually have more trust that the actual person's watching the content, that Netflix. You could pick your use case and your vertical, but we want to take what we view as toll booths, where you have to manually process like portal by portal, and we want to turn it into digital fast lanes where you essentially have this wallet that just takes friction out of your life and makes it a lot more convenient and secure, the same way that Visa got rid of cash payments. And that's certainly something that we probably take for granted. We're just applying it to everything.
What we recently launched is something I'm really excited about, which is what we would see is the same fraudster, along with being the most creative people on the planet, fraudsters are also the most impartial people. They don't care who the institution is. As long as they get money, they will try to attack you. And we would see the same fraudster come and show up amongst 5 of our customers. And we would say, this is absolutely crazy. There needs to be a way to go from a more reactive approach to fraud to a more proactive approach to fraud. And so we created this data sharing consortium that people could, in a privacy preserved manner, be able to share information about good and bad users so that you can, from across the industry, see how this person acting. So not just from a holistic understanding of how they're acting in your platform, but across industry. And so this is something that we went live with 3 months ago. We already have over 10% of the adult US population's data in the consortium. We're really excited about this. So this is something that will be a really important focus for us in the coming years. This is a fintech fraud DAO. The goal is it's really a give to get model. So as long as you are giving data, you're able to get data about whether an individual has been seen as a fraudster or not.
My immediate thought is reusable identity. I think that is, a different sort of bend on how we think about identity. That's maybe different from some of the offerings that are out there today and how I think identity has been thought about broadly up until now, right? So let me explain what I mean by a reusable identity. So once you've gone through the process of essentially proving who you say you are, and there's a variety of different ways that we do that to varying degrees of sort of data assurance depending on your requirements. So for example, going to the airport has our highest level of data assurance, obviously. If you're just going to, a Taylor Swift concert at Madison Square Garden, we need much less from you, right? And everything in between. But regardless of sort of where that ends up proofing you, the point is that you've gone through some steps to provide that proof, right? You've given us a government issued document. We've perhaps pulled some background data about you. We've certainly taken a selfie and done some sort of biometric check. There's all kinds of things we've done to sort of establish our identity. Once you've done that one time, there's not really a need to do that again, right? And so I think that's where Clear's offering really comes into the picture. And you think about anybody who's had that experience at the airport, it's the same idea, right? So you enroll with Clear the first time through, it takes a couple minutes, you do it at the pod, it's really super fast, but you do a couple things. We grab all that information about you, we persist that in a very secure way, and then the next time you come through the lane, it's much simpler. Iris or fingerprint, boom, you're done and through. We want to bring that same experience to all the other facets of identity, not least which is finance. So think about, I think it's probably fair to say that most Americans have a relationship with more than one bank or more than one financial institution, I should say. And in doing so, those consumers have probably done some version of KYC a bunch of different times, right? And it's usually going to be the same stuff with some additional, to my point earlier about sort of the broad landscape of KYC, some additional details depending on individual financial institutions, right? But the consumer doesn't need to do that. And I think that most financial institutions would say that like the conversion rate of that experience and how you both bring new customers on board in a frictionless way, but also make sure it's secure and compliant and a good experience for the customer, that's very challenging, right? And so where your reusable identity comes into play now is that if you already established that identity and done all those checks in a secure way that can then be preferred to a new use case, a new node in the network, if you will, right? Then that becomes much safer, much easier, I should say, and safer. So in other words, that experience could look like I'm coming to new financial institution XYZ. I'm already a Clear member who's proved my identity to some level, and there's this new financial institution is asking me to KYC or sign up in some way, shape, or form. Oh, I see an option to use Clear. That's great. I click on the Clear button. It pops up a little modal. It's embedded in the experience. It goes, let me just grab a quick selfie. Check. Oh, yep, that's Nick. Okay, here's all the information about Nick that you need to know. Account is open, right? Now, for the consumer, that's a way better experience, but also it's secure, safe, private. They've consented to it. They're aware of what data is being shared, right? It's all within their control and hands. But for the financial institution, they've made this experience almost frictionless, right? It's so near to like instant that it's painfully awesome.
Alloy solves risk problems for financial services companies, in particular banks and fintechs. We solve 3 types of problems: fraud problems, compliance problems, and credit problems, and specifically the decision-making around those topics: stopping fraud, staying compliant, making credit decisions when you originate accounts and after you originate accounts, everything from loans to credit cards to checking accounts to brokerage accounts, et cetera. So one of the things that's been so interesting, and so again, like, because Alloy is fundamentally decision-making software for automating, making a decision about somebody, whether they're fraudulent or not, making a decision about whether somebody's a money launderer, or making a decision about whether somebody is a credit risk or not. We have a very wide application in a very narrow area. So when folks go, I'm going to answer the actual question, but just as a background for why I know this answer, when people actually go and facilitate the end-to-end decision-making process, inclusive of even if people go look at an application to do some sort of manual review, which we hope they don't have to do, but even if they do, Alloy facilitates that entire process from ingesting the external data, building the decision-making flows, building the steps the user goes through, providing case management around that, et cetera, et cetera. So one of the things that we are really dialed in on is exactly what are businesses, banks, fintechs, companies that you may describe some other way, but provide financial services, money transmitters, et cetera. What are they actually doing end to end today to stop fraud and say yes to good users and stop fraud? And is it working? We have like a really tight understanding of that because we see the entirety of the process, not just a part of the process.
As we've heard from these industry leaders, the landscape of fraud prevention and identity verification is an ever-evolving cat and mouse game. Frankly, hearing about the state of fraud and identity management gives me reasons to be concerned. No one is safe, and it seems like all of us have to increasingly step up our prevention measures. That said, it is a bit comforting, at least to me, to know there's an entire multi-billion-dollar industry solely dedicated to fighting fraud, and this episode reflects just a small sample of it. In closing, I'd like us to keep 3 conclusions in mind. Number 1, the arms race between fraudsters and fraud fighters is accelerating. As fraudsters become more sophisticated, leveraging AI and social engineering, companies are trying to stay ahead. The future of fraud prevention will likely involve a combination of advanced tech, including biometrics, behavioral analysis, and cryptographic solutions. Maybe some other techniques that we don't know about just yet. Number 2, collaboration in fraud fighting is more crucial than ever. We're seeing a shift towards industry-wide cooperation with data sharing consortiums and collaborative platforms. This to me suggests that no single company can effectively combat fraud in isolation. It requires a group effort. And number 3, the balance between security and friction-light user experience remains a critical challenge. As fraud prevention products become more sophisticated, creating a seamless solution and user experience remains paramount. The companies that can strike this balance effectively will likely take the lead in the industry. I hope you enjoyed this episode, and I want to thank you for tuning in. If you want more interviews, make sure to subscribe, follow, and leave a review on Apple Podcasts, Spotify, or wherever you get your shows. It helps and truly means a lot. And if you have any suggestions or thoughts about the show, just drop me a line on Twitter or LinkedIn. Signing off till next week, I'm your host, Miguel Armaza.